So I think there's a lot of indicators telling you that the suppression of silver prices cannot last for much longer, and there has to be a new equilibrium price of which the market continues to function. Ron.
$30 silver, $40, $50 silver. When will we see true price discovery for silver? Today, we're fortunate to be joined by Mr. John Lee. He's the CEO of Silver Elephant Mining. They have over 100 million ounces of silver in the ground in Bolivia. So to say that he doesn't have an interest in the silver price, I think would be an understatement. John, welcome to Ron's Basement.
Yeah, I mean, Ron, I've been in the silver industry I've been in the metals and mining industry for more than 20 years. And stumbled onto silver once I moved to Vancouver in 2000 after being semi-retired from the Silicon Valley. And my girlfriend was from Vancouver at the time. And then subscribed to the likes of James Turk and Ted Butler and David Morgan, of whom I'm a very, very good friend of. And then the latter part of 10 years, from 2010 to 2020, I transitioned from being a full-time investor in the junior mining space to running Silver Elephant. And it's been a wild ride. It's been 14 years. Elephant is, I think, one of the very few companies that has been surviving, and I've been writing checks to keep the company afloat. And we've been through a lot of thick and thin. And Ron, I am a firm believer that the best is yet to come, and I don't think we're going to wait very long. Maybe in the next couple of weeks, we can see some major spark works.
Yeah, and on a big picture level, there's just a huge dislocation in the silver price when you look at the supply factors, which we have a decreasing supply of silver, and demand, which is projected to continue upward, but has already been continuing upward. What do you attribute this mispricing in silver to? Or any factors that you think are more important than others?
Hey, Ron, I've I've been asked this question probably 30, 50, 100 times, and I don't know what the real reasoning is. I don't think it's so much to do with the real supply and demand of silver. And the reason I say that is we're measuring silver with US dollars. And US dollars is being close to 100. US dollars is an abstract concept. It is being valued by a collective conscience of people who believe what it is should be what it is. Yeah. So it is not, so therefore you say, hey, silver is undervalued relative to what? And I'm getting a little philosophical, Ron. Hopefully it's sort of a different flavor to your audience. We are in a market of which I watch very closely, all the equity markets. I'm a chartered financial analyst. I travel over 40 countries. Is the process of price discovery has long been distorted. And I'm not just talking in particular silver. There's the US dollars, there's interest rates, for example, and there's other commodities, and I mean, just take interest rates, for example, right? Interest rate was 1% not only 2 years ago, and now we're at 5%. And if you talk about because of inflation, well, how do you measure inflation in terms of the oil price? Oil is $70 now, but back in 2010 to 2020, oil averaged at around $70. The interest rate was very low. Going back to your questions is why is dislocation of the fundamentals of silver price measured in US dollars? It is my firm belief that the market, particularly silver, is very, very heavily managed. And the reason for that is because all the different agendas, 2030, the WEF, the runaway, and the sort of, the U.S. having to keep its image as being the superpower. There's a lot that means that the price of real money has to be managed in gold and in silver, and that's why you're seeing a tremendous amount of volume trading in the futures contract, of which the tail is wagging the dog. what I mean by that is the current silver price is not dictated by the true physical demand, but rather you have a lot of physical buyers and sellers. They are, we're part of attributing to this because they look at the screen of what the price of silver is and they take it as the price for their transaction. So, but eventually, Ron, the pendulum of the coil is going to be sprung for low enough that there's just not going to be a lot of physical silver available to be had at these current prices. And that all the silver mining companies are mining silver at a loss. If you look at all the mining companies are trading at a 2-decade low. So I think there's a lot of indicators telling you that the suppression of silver prices cannot last for much longer. And there has to be a new equilibrium price of which the market continues to function. Ron, I don't, it's not a very direct answer, but I'm just bringing up sort of some of the trends of thoughts that I have because I don't have any notes prepared for this call.
No, but you bring up a great point. Number one, the quote unquote price of silver that we've all been trained to look at is measured in US dollars. And those US dollars, I'm a US citizen, I'm a patriotic person, but the reality is the dollar is really based on nothing. It's a confidence game, like you said, and or a con game, some people may say as well. And at some point, I have twin 11-year-old daughters. We go to water parks and there's these giant buckets that fill with water and eventually they tip over and all the water comes spilling out. At some point, we reach this tipping point where, if I heard you correctly, the physical demand for the metal overwhelms the electronic paper market's ability to continue to manipulate the price. And
right. And good example of that, Ron, is about 2018, 2017-ish of the palladium run-up, where palladium went from $500 to $2,500 in the span of months. The price levels I have to sort of try to recollect, but it's that level of magnitude. When people are going after physical silver, you're going to see some clear signs. People will be raiding the ETFs, clearing the vaults to get the metal. And you're also going to see very steady price increases leading up to the run-up, and irrespective of the action of the US dollar index, which is used as a way to manage the metals prices. And Ron, I think that we've seen the last few days as a very clear signs. I'm very cautiously and optimistic and quite excited. Couldn't really withhold my enthusiasm because the dollar has been going quite strong and been sideways to up. But the silver price is creeping up in the last few days, even on the days where the dollar index was up, up to 0.5%. So that's telling me maybe there's always somebody in the know that some guys are front running what is to happen, which I believe is going to be a potential significant correction in the US dollars and also a very strong physical demand from silver and gold because of this geopolitics and the broken down of the hegemony of the US-led with the US anymore, and they are big players. The billionaires and centi-billionaires are and the central banks are really moving away from US dollar into the physical metals. The story's been talked about around for a number of years. It's almost like when it really starts to happen, you kind of question your own beliefs and you have your own doubts. I am all over in December, and the cartel has been working overtime every day to try to put the lid back below 2,000. They weren't able to do that, and on Tuesday you had a rollover of the gold price, and that's why gold jumped from 2030 to 2050, and it looks like it's going to run away. There's just a lot of things happening, a confluence of events, both physical demand, the timing with the Chinese New Year coming, and then in the next, I would say before May, certainly before summertime.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pembex is best, and you will too. And be sure to tell him that you're from Ron's Basement.
It's crazy. I have my notes here, John, and I'll read through these quickly and get your, and you've touched on some of these points already. One thing that I think a lot of us in the silver community tend to forget about is that if gold takes off, and gold has closed above $2,000 on a weekly basis for the last 10 weeks straight, if gold goes to $2,500, silver will react in a much more dramatic fashion. And when we look at the silver to gold ratio, which recently has been as high as 90-1, that indicates to us that we are primed within the silver market for some potential upswing. I heard recently someone say that 400 million ounces of silver in the last 3 years have left the vaults at the COMEX and basically the LBMA. You know, that there is this structural deficit within the silver industry. And it seems like everywhere every time I hear of anything that has to do with new technology, there's some type of relationship to silver. I know that even now with these hydrogen fuel cells, which are starting to get a big amount of attention, there's this idea that Stanford and Toyota came up with a way to substitute silver for the platinum that's typically used. It just feels like everywhere you look, there's a great setup. And I love, you used one of my favorite words, John, confluence, right? Like a confluence of factors, a coming together of supportive factors, whether you look at the fundamental supply demand, whether you look at, like you said, the geopolitical situation in the world with the BRICS, like it's a confluence of factors that, gosh, it's hard to imagine silver. Sure, it could go down. We both know that, but it seems like the runway for price increases far outweighs any risk of potential downward price movement.
We are, I really, I don't say that a lot, Ron. I've appeared to hundreds of interviews. If you think silver is low based on the gold to silver ratio, then the mining equity is the lowest point relative to silver. That just shows to you there's a very, very small, there's non-existent demand for silver. And it's always around the speculative demand that drives the metal prices, or drive any market for that matter. If you look at oil, for example, you know, you're into negative, right? Like, do people stop driving and consuming oil just because of the pandemic? No. And so I don't read too much about the industrial demand for silver in dictating the trend. It's always, they're price takers. They're not the price setters. It is the speculative demand that's going to drive, because, Ron, the higher the price go, the more you buy. Whereas on the industrial side, the higher the price go, they start looking for alternatives. Secondly, Ron, I don't read a lot on the COMEX and on the LBMA trades. You know, I'm being purely speculative with somebody with over 20 years of experience and study. These trades, these falls the volumes are not significant relative to the overall metals production. But secondly, I think it's 99% window dressing, Ron. That means the Rockefellers is taking some silver out of this gold and give it to the Rothschilds. and if you are really a buyer, a true buyer, like Eric Sproul, or even say Warren Buffett, or another billionaire, say Elon Musk, if they were to place an order for 50 million ounces of silver in the futures market and demand delivery from COMEX, instead of getting those silver out of the vaults, COMEX vault, you're going to get a call from the Fed. and it's just not, it is a window dressing exercise. And that is like that's why LBMA is members only. And these gold, it's my belief again, all the gold from Switzerland refineries go directly to the vaults in Switzerland owned by the elites that's been running the world in the last 200, 300 years. And the trades that you see, the physical metal, is just to demonstrate the existence of volume and metals changing hands, to create that illusion that the exchanges are functioning as they should. Now, I want to go back to one more point about the gold and silver ratio. Again, that just shows the very tepid speculative interest in the silver market right now. And there's a couple of reasons for it. I think one, we can attribute to the lack of industrial demand right now because the China is going through a very, very tough time. And so you see the base metals and oils are low. But the other interesting observation is we can trace back to early 2001, 2002, which is very reminiscent in some way to today. You have a very strong dollar. Your equities are in the verge of breaking out. And you have gold that's leading the charge. Remember, like gold broke out $250 when Gordon Brown dropped the last Bank of England's gold in 2001. But silver took about 2 more years to catch up to break out that fight. Silver is a retail market by and large. The real billionaires, you know, they're not interested in silver as much as gold because they just got too much liquidity. So they have to go for something of which they can accommodate their sizable investment. However, there's going to be some rotation of gold into silver if gold especially stays above 2000, and you see this gold to silver ratio of 90, which is really being touched upon a few times in history. So therefore, you know, that ratio doesn't necessarily guarantee it's going to revert back to the normal 70 or even back to 50 or even 30 by the time it's said and done on the peak of the market. I do believe that the ratio is going to revert, you know, back to at least average of 70. I wouldn't read the ratio too much, Ron, because we've also involved in exploration for platinum, which I think the analogy with platinum is a little different because silver does have a lot of industrial uses as well. But I want to be cautious, though. I think through technological advances, the amount of silver that goes into electronics or going into solar panels will decrease over time. And there will be substitutes. So I think for now, you know, in the next 3 to 6 months, we're just going to be purely looking at the action of gold, the movement of the dollar, and that ratio coming down. I would say in the next 2 to 4 weeks. We're not talking months.
I want to get your commentary on this as well. You mentioned that the investment community, they are the price makers within the silver market, and all the indications that I get are that, you know, sentiment is pretty low right now within the investor community when it comes to silver in particular. But I want to paint a positive stroke onto that, which is that gives so much room for improvement. I've heard a few people say that for silver to do well, we don't need it to be loved necessarily. We just need it to not be hated so much like it is right now. To me, that's positive because, you know, $23 silver. Yeah, I believe that's not a good price. But if we've been able to hold that level in an environment where the metal has not been looked upon very favorably, with all this room for improvement in sentiment, that gives us, you know, some hope for a big runway in terms of price increases. And you know, we talk about investor demand, retail investor demand. We do know what's happened during some recent circumstances, like the banking crisis that we had 11 months ago. You couldn't find physical silver. People were paying outrageous premiums to get their hands on silver. And even during the C-19 crisis, the same situation unfolded. So we do know that these waves of demand definitely come back.
Ron, I wouldn't say that there is no speculative interest or it's being hated or it's been, I would just say they're being ignored, Ron.
Yeah.
The people, the money managers, the power that be, the people have money, including Warren Buffett or even Alan Greenspan. The people know that silver is money. However, because the price is being so well managed, they don't see the upside of that. So they'd rather be channeled into cryptocurrencies or into dollar index trades between the euros and the pounds and etc. So they're being led. It's almost like a sheep, right? They're being shepherded to sort of play within the bounds of what they are, what they're being led to. Ron, I think that the question then becomes, and there's just been a lot of diehard people that disheartened, lose their shirts, And, you know, they never seen the light of the day, so they kick the bucket. So I think these guys are always in there. And then there's always a lot of people. I think, Ron, the point is this. The players are waiting for the green light to be given to go into the market.
Yeah.
And now the question is, you know what, John, what's the reason? What's the point to study all those things, the fundamentals, and what, you know, I have a lot of shareholders. I was just with one earlier today. John, you talk about all the fundamentals, and in the end, I'm losing money with you guys, and all my silver is the worst performing guys. I bought silver at $20 15 years ago. Now it's still $20, right? If I bought anything else, even Simpsons stamps, I would have made 5-10 times more money. So I think the point is the players are waiting for the green light, and that's why, you know what, Ron, I've been at it for 20 years. I'm not an advocate of doing this on a full-time basis or channel all of your investment in there. But it's always good to keep an eye and in the market and just watch where things are moving, and just put your sort of, you know, thumb in the air to see which way the wind blows. Because the markets can stay irrational, then you can stay solvent, or you can, you know, before sort of you retire. But once every 10 or 20 years, the cartels will lose grip, Ron, and because they have been suppressed first. Because another analogy, if the cartels and can manage to whatever price level they can, why don't we manage to silver back to $2, right, Ron? I think there are some equilibrium levels, and there are some extreme of coil you can only wind it to so tight, and we're at that point, Ron, because price of everything has doubled or tripled in the last 20 years, and yet silver first touched $20 in early 2010. So it's been over 14 years where silver has stood still. Just from a gut feeling of traveling around the world and looking at different price levels like Big Macs or even real estate or earnings or salaries, silver should be at around $50 in today's relative purchasing power, and just not even take the dollars aside, just on the exchange of goods. The way I look at it, Ron, is there are some players, and you know, we're almost looking at sort of the white knight versus the black versus the white, right? The battles of the titans, the good versus the bad. My belief is the silver is going to be given a run up, and they will be green lighted, and the short's going to cover, and the same players, sort of, you know, neutrality players, they're going to go into the silver market because there's money to be made. And the reason I think the cartel is going to be given the green light for silver bucks this time is the price has been suppressed for so long already. And then a new equilibrium has to be reestablished. Just like the dam, right? The water is exceeded that level. The water has to be spilled. So the dam needs to be erect higher, and the level of water needs to go higher. I cannot think of a better analogy. So, and the way I look at it is, it's almost like a battle of chess. Eventually, Ron, there's no way to prevent with bulletproof, with fail-proof, that if you have money, fiat, that you go and buy silver. There's really not, they can discourage it, but they cannot really stop people from doing that. And that's why they're being so heavily managed. But at some point in time, there's going to be some players that's going to say, you know what, I've had enough of this, okay? Like the Putins and the Xi Jinpings and the Saudis. You know, I'm done with this. Like, you know, I've been playing this game because it's a matter of convenience. You buy my oil, I buy your weapons, and that's it on the dollars. I mind my own business. I mind my business. You mind yours, and it's a temporary marriage of convenience. I think at some point, I think we're at that point that people are saying, you know what, screw this, right? They're gonna band-aid together, and they're just gonna make a statement like Charles de Gaulle in 1970s. You know, they say, hey, here's my $1 million oil by $35 an ounce. And I think that we're doing that right now. I think gold is very strong towards the end of December, right? Running up. And, you know, on a daily basis, gold is exhibiting that right now as well. Despite the dollar at 103, gold has never really come below 50-day moving average, certainly above 200 moving average of $1,970. So that tells me that there are some big-time players are making a very subtle yet strong statement to the cartels and say, you know what, I'm not like, there's more for me to lose than for me to gain. And they are, and these guys are like a freight train, right? They're just gonna be a diesel power, they're just gonna march. and they're just gonna say, hey, you know, I'm showing my cars, I'm doing this, and these are the guys that cartels cannot really go to war with, right? This is like clash of titans. And you know, for the little guys or the speculators, they can call the Fed, can give a call and say, hey, unwind your positions. You know, the metals market is not where you want to be, and the IRS can be knocking on the door. But these titans, big time players, they're not going to be deterred from just a subtle warning. So the question is cartel really going to step up to their sort of you know, last showdown? It remains to be seen, because I believe that, you know, the guys that they own 70-80% of the gold in the world, I believe all the central bank gold is being emptied out already, and nobody's at home. And so the question is, you know, are we going to see the clash of titans? I think that we were likely going to see that in the next 4 to 6 weeks if gold stays above $2,000.
Yeah, I mean, we are certainly in a time of geopolitical change like none that I think most of us have seen during our lifetime. When you talk about this clash of titans, it almost, and I guess you're alluding to this when you say possibly 4 to 6 weeks, 4 to 6 months, sometime this year, that it's already happening, that we already know that that China and Russia and the BRICS countries are banding together and have made it very clear, you know, that they're tired of the games that have been played in the West in many ways. You know, and the other thing I like to think of that came to mind as you were talking is just how small the silver market is. Right. I mean, if you figure about 1 billion ounces a year of silver are produced by the mining industry and recycling efforts, that makes it a $23 billion market in terms of annual production. Compare that to the market cap of Microsoft or Apple or something like that. Like, this is not a huge market and has a lot of room for growth as well. John, thank you for sharing your in-depth knowledge and your insights into what's going on. I want to remind our viewers that John and I are going to do another video where we're more focused on the company that he runs, Silver Elephant Mining. They happen to have 100 million of ounces of silver in the ground, which likely explains why John has such an in-depth knowledge of the silver market. So be sure to watch that video as well. John, thank you for joining us, and we'll talk to you soon.